Hi there, I'm Irk, and this is my channel, Get Irked. In this episode, was that guy from The Graduate actually right? Are plastics the future? In a lot of my videos, you'll notice that I talk about high growth tech stocks, but in this episode, I wanted to get a little bit down and dirty with an industrial, Dow Chemical, ticker symbol DOW. For a lot of investors, especially younger investors, a company like Dow Chemical might seem boring since it is an industrial and it focuses entirely on developing new kinds of chemicals. However, to the uninitiated, Dow Chemical is an excellent innovator. In fact, they're working on biodegradable plastics, and if they crack that code, this could be one of the best growth stocks into the future. Even if they don't, it's still important to remember that as an investor, you need to have a diversified portfolio, and one of the best ways to expose yourself to the industrial space is through a company like Dow Chemical. Even though the company of Dow is quite old, the stock is relatively new because Dow used to be a part of Dow DuPont and split off back in 2019. So in this episode, we're going to take a look at Dow's fundamentals. I'll give you a buying plan of what I would do if I didn't already hold shares in the stock, and then we'll go over my own position, where it's come from, and where it's going to go into the future. When you take a look at its fundamentals, you can see that Dow has a PE ratio of only 8.17. For a non-high growth, non-tech stock, a PE ratio of 20 or more is considered overvalued. So when you're talking about a PE ratio of under 10, you're talking about a stock that is actually near its fair value, if not undervalued. And as you can see, even by Yahoo Finance's calculations, which are often very strict, it's still considered near fair value. So this really isn't a bad choice when you're looking for a stock that has a reasonable valuation and could grow into the future. In addition to that, Dow pays a really decent dividend of $2.80 per share, where at its current level, that is more than 4% annually. Even with the interest rates rising, a dividend yield that high attracts a lot of investors who want to hide out from inflation in a stock that's probably going to increase in capital value, but also pays you a really good dividend while you're waiting. Dow has really been growing into its own lately, and you can see that its 52-week range ranges between $52 and its all-time high of $71.86. So even though the stock market is in a downturn right now, you can see that Dow is closer to its all-time high than it is to its low. So let's take a look at Dow on a chart, and I'll develop a buying plan of what I would do if I didn't already hold shares in the position. So we'll start by drawing a Fibonacci retracement from its pandemic low to its all-time high that was just set in the last week at $71.86. You can see that the Fibonacci retracement gives us key levels of support, like down here at about $60, where it found support in the past and has found support several times throughout the past at this level. So depending on how anxious I would be to start a position in Dow, I would not use a 50% allocation since we are closer to its all-time high than we are to its low. So I would start with 25% of the overall allocation I wanted to put in the stock and buy that. I think it's possible, if not likely, that we could see Dow retreat a little bit from its new all-time high. And I'm looking down here at this day as my first buy at $62.82. From there, you can see that Dow has regularly pulled back in the past, and it seems to be consistently finding support around these levels. So I'd actually use $57.62 as my second buy. After that, you can see, once again, that 38.2% retracement really did provide a lot of support, so I'd probably use the low of this day as my next buy, here at $52.47. From there, we move down to the 50% retracement, and you can see that it did find a lot of support, so it depends on whether or not you're wanting to be more aggressive or less aggressive. If you wanted to be more aggressive, you could buy above that retracement line using a day like this at $47.15. But you can see that it also regularly pulls below it. So I'd probably split the difference and use $45.13 as my next buy. After that, you can see the 61.8% retracement level also provided a lot of support. And again, being a little bit more conservative, I'd probably use the close of this day down around $40.08 as my next buy. After that, instead of waiting for the 78.6% retracement, I'd actually go a little bit higher. And you can see there was a lot of price action around these days here. So I used this point at $35.76 as my next buy. After that, I would cross through the 78.6% retracement and use the low of this day at $30.90 as my next buy. After that, we've got a bit of a jump down to the low of the pandemic at $21.95. But since I don't think we'd see it get quite that low, I'd look in the past and see if I could find support above that low. And I think $23.67 or around there would be my seventh buy. So with our initial 25% allocation at $62.82 and the 7 additional buys at 10% allocations each, you can see that we would have a 5% cash position still left in this stock. And even though I don't think the likelihood of Dow even testing its pandemic lows is high, I would like to have that 5% on the sidelines just in case it does sell off, break through its pandemic lows, and gives us an opportunity to buy at an even lower level. From here, let's take a look at my own position, where it started and where it's come from since then. I made my first buy in Dow Chemical on May 3rd of 2019 with a buy at $52.78. And rather than go over all of the play-by-play from 2019 into the pandemic, we're just going to fast forward to right before the pandemic sell-off so we can see what I did then. From May of 2019 until March of 2020, I made a number of buys that lowered my per-share cost, so I ended up going into the pandemic with a per-share cost of $47.03. And just like the rest of the stock market, the pandemic was not good to Dow Chemical. Naturally, no one knew if we would need industrial supplies in the middle of a pandemic. Dow had a pretty spectacular sell-off, making a low down here on March 16th of 2020 at $21.95. And as always, I bought all the way down, adding to my position and lowering the per-share cost with buys throughout February and March, with my last buy on March 12th at $22.88, which left me with a per-share cost of $41.29. And from that point, it was time to let Dow run to see where it might go, and I did take profits throughout 2020 because, as always, we had no idea whether or not it would retest its lows. I made several sells at key spots and highs throughout 2020 to lower my per-share cost in Dow, with my last sale on November 18th of 2020 at $55.95, which lowered my per-share cost to $36.50 per share. However, when Dow continued to demonstrate strength throughout 2020 and 2021, I decided it was time to start adding capital back into the position. Even though that would raise my per-share cost, I wanted more exposure to Dow. After Dow made its all-time high at $71.38, I started to add to it as it sold off, with a first buy on June 16th at $65.95. Dow continued to sell off, so when the stock market sold off in September of 2021, I made 2 additional buys, one at $60.38 and another one at $56.26. And even though I was buying above my per-share cost, you can see on September 20th, I still had a lower per-share cost of $35.69. And this was entirely due to the fact that the stock pays a dividend. If you're a long-term investor, you want to reinvest the dividend because that adds compounding interest to your investment. So rather than getting paid out in a certain amount of money, you actually get paid out in shares. That way your overall share count increases and your per-share cost drops. After September, I made my last buy of 2021 at $54.35 on December 1st. And this was where Dow really found a low and started to recover and take off into 2022. Dow's been performing so well that I haven't been able to add to the position. In fact, it's doing so well, I've actually had to start taking profits. In April of 2022 alone, I have sold 3 times in order to reduce the amount of capital that I had in the stock, with my first sale on April 12th at $63.32. I made another sale on April 20th at $67.74, and when Dow broke through to all new highs on April 21st, I made my most recent sell at $70.39. By regularly taking profits, I've reduced my per-share cost to $34.25, which represents a 35.59% reduction from my initial buy back in 2019. From here, I have both additional buy targets and sell targets, with my next buy target at $52.32, which is slightly above the low of 2021, and my next sell target, which will be at $72.91, which is slightly above its new all-time high. Between its prospects as a very innovative industrial and its rewarding dividend, Dow Chemical is one of the foundations of my portfolio. In fact, right now, it's the second biggest position in my investments in play portfolio, only beaten out by Apple. For more, check out my website, GetIrk.com, which is always 100% free. Please hit like and subscribe, and I'll see you in the next video.